What's going on, guys? Today I have another great video for you. We are going to be talking about Alphabet, Google, whatever you want to call it. We're going to be talking about Google stock and what's been going on with it. We can see here that it has moved up over 10% over the last 5 days. So we're going to get into why that is, what's been going on with the market, what is going to continue to hopefully go on with the market, and I'm going to make a little bit of a prediction at the end of this video. I'm going to predict what's going to happen over the next month, 2 months, what's going to happen with the market in general, and what's going to happen specifically with a lot of these tech companies, because there's a lot of interesting things going on that I think are going to continue to be going on in the market. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure that sub button. Just to dive a little bit deeper into Google's chart, this is the month chart, and what we could see is Google topped out around 105-ish, $104.50, and since then it kind of dropped all the way down. So it had a very poor earnings announcement, and honestly there was just a lot of bad earnings announcements over the last month or so. Apple was the only one that kind of had a decent earnings, and they just barely beat and kind of held the market up, and then they ended up dropping a few days later as well, as a lot of the stocks kind of did. So Google fell all the way down here to $83.43, but since then they've bounced off that quite a bit, and they are now sitting all the way up at $96.41. So a huge move up in the last just couple weeks, really. And basically a lot of that has come with a lot of anticipation of what we're going to talk about next, which is the consumer price index that was reported here just a couple days ago. And what was reported is that consumer prices jumped by only 7.7% year over year. We've seen a lot of numbers that have been over 8%, and we're finally getting down below 7%. So that was big. And also it was big that it beat expectations. So expectations were 7.9, and they came in 0.2 below that. So that is absolutely huge. And then obviously there's some other metrics that the month over month basis was up by 0.4%. Expected was 0.6. So overall, just across the board, beating expectations, a lot of these numbers coming in lower, which overall is going to be super positive for the market in general. A lowering of inflation is going to affect a lot of these multinational companies in a number of different ways. One being that interest rates could potentially start to drop, or at least the Fed could decide to, instead of increasing the basis points by 0.75, they might increase interest rates by only 0.5%. So there's a number of different ways that this obviously affects a lot of these big tech companies and big companies just in general. But one of them that people don't really talk about a whole lot is that a lot of these companies are getting revenue from outside of the US. So they have customers across Europe who are going to be paying in the euro, and across a number of other countries. And basically what that comes down to is, with this decreasing of inflation, we see that the treasury yields have fallen, and that is going to weaken the US dollar, which, when you weaken the US dollar, basically you are increasing the value of these other currencies against the US dollar. So the euro will now be worth more in comparison to what it was previously against the US dollar. And basically, if you look at foreign exchange markets and study kind of foreign exchange, you'll understand kind of this relationship. I don't want to get too much into it, but basically that's going to help their revenue numbers for a lot of these companies that are receiving revenue from overseas. And with us finally starting to see these inflation numbers coming down, investor sentiment's starting to turn a corner. A lot of expectations have been very low for what's going to happen with inflation. We've heard a number of people come out and say that this inflation is permanent, that it's not going to go away for any time, in the near future. And now this is starting to, paint a different picture. We're starting to see these decreases come in. They're beating expectations. We're seeing inflation numbers that are lower than what people, had expected. And that's overall going to be a positive on the market, right? Because a lot of investors have seen these numbers and said, okay, we're just going to keep getting worse and worse over the coming quarters. And now, with inflation coming in lower, there's kind of this glimmer of hope that we could be seeing a corner and a turn in the market where inflation could start getting a lot more under control over the next year or so. And that, is going to benefit a lot of these businesses. And as we've kind of entered into this recession over the last couple quarters, a lot of businesses, the first thing that they're going to cut is their advertising budget. That's often the case when you kind of start going into a recession. Advertising is seen as something that's, more expendable, and that obviously has a huge impact on businesses like Google that rely heavily on their advertising. I've gotten into this before, but there's a very interesting trend with these numbers. So what we're looking at here is basically the consumer price index over the last few years, and we can see 2021 numbers. I highlighted them all here. And what's very interesting, and I'll go up a little bit so you can see the month by month here, but basically from May all the way till September, we saw that in 2021, the number sat between 5 and 5.4% increase in CPI index. And basically what that's meant is over the last, 5-ish months in 2022, we were comparing this year versus last year, and last year was staying about the same. We hadn't seen inflation be very, very high, over that 5.5 to 6% number. And that has resulted in inflation basically sitting around, this 8.5% number that we've seen over the last 5 to 6 months, right? We saw 8.6, we saw 9.1, then we saw 8.5, then we saw 8.3, then we saw 8.2. So not a whole lot of change in those numbers. And that's obviously driven a lot of concern in the market. But here, what we've started to do is we've started to turn a corner, because you have a 5.4 number here in September. And then in October of 2021, we saw a 6.1 number. So we're starting to compare year over year numbers against a lot higher numbers. So that's going to make a huge difference. And especially next month, we see another increase, 6.2 to 6.8% from October to November of 2021. So now year over year, we are going to be comparing against this 6.8 number. So I would not be surprised if we see, a 7.2 next month, a 7.3 number, maybe even a 7 number for inflation over, the month of November year over year. And I think that'll be very, very interesting for a lot of these investors, because going forward, we're going to be comparing against a lot higher numbers, and we could see inflation start dropping off in a dramatic way. If you remember, obviously, the Fed really only started increasing rates at the beginning of this year. They really didn't take a very hard stance until really the middle of the year, when they started increasing by 0.75% the interest rate. And obviously that really hasn't come into an effect. It takes a number of months for that to really take effect in the economy. So I think over the next couple months, we're going to see that really, that effect take place. We have a 6.8, then we have a 7. And then when we jump into 2023, we're going to be comparing against a 7.5, a 7.9, an 8.5. I think the start of next year, the first 3-4 months of next year, I think we're going to see inflation fall in a dramatic way. And we could see numbers, in my opinion, get potentially down to, a 5% number. So again, all my opinion, I think that's kind of speculative. It all depends. I think the Fed is going to start seeing this trend, and they might start pulling back some of their increases to, some 0.5s. I think we could potentially, over the next month, they could actually pull their increase back from a 0.75, which is kind of where expectations are right now, all the way down to a 0.5 number. And then maybe in early next year, get it down to around a 0.25 increase in interest rates. And then potentially by the middle to end of next year, I would not be surprised if they're starting to decrease interest rates. Again, I think that's kind of aggressive, but I think that is a possibility, if we see this trend continue. Hopefully they don't decrease too soon where, we start seeing inflation come up again. But, I trust Jerome Powell to have at least some sense of, timing these things and being, very cautious about how he approaches them. So again, all my opinion. I hope you guys enjoyed the video. If you did, make sure you drop a like down below. I'd love to hear your comments on what you think is going to happen over the next year. I think there's a lot of speculation, a lot of interesting things that could go down that are going to have a number of effects on the economy and on stocks like Alphabet, Google, Meta, everything like that, Amazon. So I'd love to hear your comments down below. But if you enjoyed the video, again, drop a like down below. If you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.